Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income. If you want to read more about what John writes on a regular basis, you could head to incomeinvestors.com. You can find the link to the website in the description below. The US inflation rate currently stands at 3.09%, down from 3.35% in January and 6.41% from last year, and lower than the long-term average of 3.28%. That's good news for cash-strapped Americans. Interest rates, however, have a different story. The Federal Reserve Fund's target rate has remained in the range of 5.25% and 5.5% since last summer. And while average American is looking for the first rate cut to come sometime over the next few months, the central bank is probably in no hurry to cut rates given the strength of the US economy. Still, analysts expect the Fed to cut its key lending rate, which impacts interest rates, by 2 quarter points by end of this year. That would take the current interest rate range to between 4.75% and 5.25%. John?
Yeah, thanks, Mo. And that's still pretty high, but cutting rates too quickly in a strong economic environment could reignite inflation, which would result in additional rate hikes. And no one wants to see that. Even when rate hikes come more quickly, interest rates are still expected to stay above, pre-pandemic levels for quite a while. Again, not something the average American wants to hear.
Niche area of markets that are designed to take full advantage of the current interest rate environments, though, are business development companies, or BDCs for short. At Income Investors, we've nicknamed these firms alternative banks because they operate much like a traditional financial institution. They borrow money at low interest rate, and then management lends out the money to customers at higher yields.
Yeah, and thanks to a quirk in the tax law, these firms pay out some of the highest yields around. For example, traditional financial outfits have to pay the government between 25 cents and 35 cents in taxes on each dollar they make in profit. Under federal guidelines, BDCs pay little or no corporate tax on their earnings.
And in exchange for this benefit, BDCs must distribute at least 90% of their ordinary taxable income to shareholders. And that's what makes Oxford Square Capital Corp, traded on NASDAQ under symbol OXSQ, such a compelling option in today's economic environment.
A little background: Oxford Square is, as you can imagine, a BDC. It invests in both public and private companies. It invests in secured and unsecured senior debt, subordinated debt, preferred stock, common stock, and things like syndicated bank loans. Now, its portfolio of investments includes various industries, including structured finance, software, business services, healthcare, utilities, and plastics manufacturing, among others. Now, it concentrates its investments in companies that have annual revenues of less than 200 million and a market capitalization or enterprise value of less than 300 million. The firm invests between 5 million and 30 million per transaction, and it actually looks to exit its investments within 7 years.
It reported a strong net investment income.
Yeah, now you'd hope as an alternative bank it would be good at making money, and it is. For the third quarter ended September 30th, Oxford Square reported net asset value per share of $2.78 per share and net investment income of 6.4 million or 11 cents per share. Total investment income for the quarter was 13 million. During the quarter, Oxford Square actually didn't make any new investments, but it did receive more than 16 million from sales and repayments of investments.
And it announced a 3.5 cents per share monthly distribution.
Yeah, a strong net investment income helps provide shareholders with a reliable distribution. Oxford Capital currently pays a monthly distribution of, as you said, 0.035 per unit, or 42 cents on an annual basis, for a pretty frothy yield of 13.6%. And the good times are expected to continue. In November, the company's board announced distributions for the first 3 months of 2024, the 0.035 per unit.
Oxford shares have been on a move recently.
The underlying shares of the best alternative banks got a lot more interesting in early November. That's when the Federal Reserve said it would keep its key interest rates at between 5.25% and 5.5%. Now, the Fed did not rule out further rate hikes, but with inflation falling, Wall Street is pretty confident the Fed is done raising rates for this cycle, with the first interest rates cuts coming. So is the biggest question. A pause in interest rate hikes and lowering of inflation means the U.S. economy is expected to avoid recession. And a stronger economy means many small and medium-sized businesses will be looking to BDCs for additional capital to help their companies expand. And of course, that is good for Oxford Square. Now, currently trading at its highest level since August 2021, OXSQ stock is up around as of this recording, 12.5% year to date and 30% over the last 9 months.
John, thank you so much for your insights. Industry tailwinds have made alternative banks like Oxford Square Capital Corp a great option for income-starved investors. Not only does it provide much-needed capital to public and private companies that are often overlooked by big banks, it also provides investors with reliable, high-yield monthly distributions and healthcare crisis asides long-term capital appreciation. While the Fed is most likely done raising rates for this cycle and is expected to cut rates by at least 25 basis points this year, borrowing costs are expected to remain above pre-2020 health crisis levels for years. That's a bad news for people with credit card debts and mortgages, but great news for BDCs. That's it for today, and make sure to go to incomeinvestors.com now to get our free special reports on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.